Well, the latest controversy tied to the White House is reverberating through Wall Street. Stock markets down today after the New York Times first reported U.S. President Trump ousted FBI Director James Comey to drop the FBI's investigation into Michael Flynn's ties to Russia. Earlier, we spoke with BMO's Beleski to find out why the uncertainty over impeachment implications for the president has him feeling like the concern is overblown.
How do we know it's an impeachable offense? Where in the Constitution does it say that it's an impeachable offense to tell someone, suggest that they stop it? Unless he goes before Congress and lies to Congress, and it's proven that he lies, that's an impeachable offense. So where is it an impeachable offense? I love when we come up with these headlines and bullet points. Where in the U.S. Constitution does it say that?
Well, so intervening in an independent investigation that could pertain to you.
If proven that he actually did that.
Proven, yes, yeah.
So that's a long way down the line.
So you're highlighting how removed we are from.
This falls right into my trap. And my trap with respect to investing is I believe, and we believe at the BMO, that we should be overweighting analysis and underweighting rhetoric. Overweighting analysis and underweighting rhetoric. You led this block with some manufacturing numbers with Canada that was a bounce back, which was pretty positive. The Bank of Canada, we believe, is a little behind the curve, that the economic data and the economic recovery in Canada is actually happening faster than everybody thinks. Same thing with America. We are so bogged down in this day-to-day, quote-unquote, noise from Washington, we're missing the forest through the trees. Quarterly earnings for Canada are going to be good, especially with respect to the financials. Oil prices on a year-over-year basis have stabilized in Canada. The Canadian economy is beginning to recover. There is no such thing as a housing bubble. We have to stop talking about these negative things and stop focusing on these issues with respect to having all this noise coming out of the Trump situation.
You're very good with your talking points, Mr. Beleski. You stick to this method and this argument very strongly, and I commend you for it, because some of that playbook has worked well with you, with some of the stocks that you've recommended, even here on BNN. But you know, largely you've talked about industrials, you've talked about financials, you've even talked about materials, but we're sitting here right now, we're looking at the TSX vastly underperforming the U.S. markets. When we look at the U.S. markets, the best performing group has been technology. We haven't seen a huge willingness on the part of investors to buy into one of your favorite groups, the banks, in recent months. So, you know, I just wonder if that thesis becomes a reality.
Right. So I'm so glad you brought that up, because it really brings about this whole notion of investing and time frames and expectations, because, you know, investments are run by fundamentals. We want things right away. Okay. Keep in mind, here's some perspective. The Canadian stock market dramatically outperformed the U.S. last year, right? For the first time in a decade, right? And oh, by the way, are stocks still positive year to date in Canada? Yes. Okay, we're talking and we're putting this tone on the markets like we're in a bear market, like the world's coming to an end, and it isn't. U.S. stocks are still up double digits since the election. They're still positive. The reason why tech stocks are up so big is because most investors believe that growth is scarce, and we're chasing the same kind of stocks, the FANG stocks or whatever, and we're missing kind of the forest through the trees, that the fundamental condition of the banks, the healthcare stocks, the industrials, some materials. Consumer discretionary is one of the better performing areas in my country, America. So, and we're missing these things because we're letting all this noise. So that's why you've seen the market begin to, correlations are beginning to fall, dispersion is beginning to increase, active stock picking is beginning to outperform ETFs in the overall market when we stick to our ideas and kind of shut off the TV and shut off the noise and just look at companies.
Do we focus on this because, quite frankly, we're a little bit bored? I mean, you haven't seen much momentum on either side for the S&P 500, and psychologically there appears to be a tug of war. The buyers don't want to enthusiastically step in because valuations are high. The sellers say, well, look at earnings growth. I mean, I shouldn't be selling here. So I'm just going to sit here, and then politics gives us a nice, you know, narrative, a nice art to talk about in the margin.
I think that's a great overlap for your viewers this morning, because we've entered a period where the market is traditionally slower, right? Between April and November. I'm not going to say sell in May, go away, because that's boring, and anybody can say that.
Take a drink.
Yeah, thank you. But momentum traditionally slows down during these periods. We just came out of a great earnings period for the first quarter on a year-over-year basis. We're going to have good earnings for this quarter in Canada. quarterly earnings look to be peaking in the S&P 500 in terms of the current scenario in the fourth quarter. We believe those numbers do not include any kind of package that can, will, and should potentially happen between now and then, whether or not it's a tax cut here, tax cut there, infrastructure change, healthcare. If nothing happens, still, we're very confident with our 2350 target on the S&P 500.
Can I just clarify that? Because you've used literally used the word explode, that earnings could explode in the second half. You said it. You're on BNN. So that
explode here on BNN.
so that is based on improvements and the tax cuts happening by the second half of the year?
If you look at companies and you actually listen to their quarterly announcements and you read their 10Qs, you'll hear them talk about and see them talk about, we're not spending any money yet because we don't really know what's going on with respect to the tax cuts. When they start to see the really in black and white what their tax is going to be, they're going to start investing because they have to invest to keep up with the rest of the companies with respect to good old-fashioned competition. That's what's going to end up happening. Now, again, nothing happens. We believe that we're still at $134 in earnings and $23.50 for the S&P 500. Yes, 30 points higher than we are today, but what is that, less than 1%? And let's take a deep breath.
I just want to ask one thing about the tax cuts. Do you think that that's keeping some people who've locked in some gains from selling stocks because they look at a potential reduction in capital gains and say, well, I'm going to wait until that capital gains tax comes down? And so actually when we get those tax cuts, we might actually see some selling counterintuitively because people feel like, all right, I can lock in my profits now at a lower tax rate.
Common sense would tell you that, but we have not seen really any kind of significant inflows into equities, right? We've seen actually more inflows into bonds this year relative to equities, and any kind of inflows that we have seen have come from ETFs. This has been a move on the institutional side. Mom and Pop America and Mom and Pop Canada, from the retail perspective, have not participated with respect to the rally that we've seen in stocks, and that's the next great leg of the bull market, is when we finally start to see distribution of things out of private equity and distribution out of things like bonds and coming back to good old-fashioned equity investing. I still believe that we're heading into this Warren Buffett, Peter Lynch era of investing in companies that we know again, and that's why Amazon's outperforming these other retailers, because we kind of know what Amazon does. It touches our life every day. That's a perfect microcosm of the kind of stocks we think are going to lead the market over the next 10 years.
All right. Well, despite Brian Beleski's sunny ways, the markets are rattled right now. So let's take a look at the North American equities. You can get a sense of this